Hello traders and welcome to another video review. Today is Friday, May 26th, 2023. Let's take a look at the Forex economic calendar today. Overnight, Japanese data had been published in form of the Tokyo Core CPI and CPI excluding food and energy. As you can see, this is mixed bag of data. The CPI is not increasing as much as previously, so that might be a good sign for the Japanese yen. Retail sales data from the Australia had been published overnight. The retail sales are on the 0%, so is way below the forecast and way below the previous reading. We are going to take a look at the Australian dollar technical picture later on today. Core retail sales and retail sales data from the UK are waiting to be published. This data is scheduled for release at 8 o'clock, so we will see what will be the situation here. During the London session, we got some speeches from the ECB officials. Arena and Lane will give a speech between 9 and 10 o'clock, and German Buba Mauder will give a speech as well at the beginning of the trading session. During the New York session, we got very important data in form of the core durable goods orders from the US. This data is scheduled for release at 2:30, and the market participants expect 0% core durable goods orders. That's not actually good expectations for the US economy. Of course, together with the core durable goods orders, we have the core PCE price index, the general durable goods orders, and goods trade balance as well. 2:30, there is a place for the personal spending, and this data is scheduled for release as well, and some data from the Canada are expected to be released at 2:30 as well. Wholesale sales are scheduled for release 2:30. At the end of the day, we got the Michigan consumer expectations and the consumer sentiment data. This data is scheduled for release at 4 o'clock. And the last important data is US Baker Hughes oil rig count, which is scheduled for release at 7 o'clock. So the total number of the oil rigs in US will be passed to the audience. So this is what we have for today. Some of this data releases are very important. Some were very important. Some of those will be a kind of a medium important through yellow dots on the important meter, important scale, or something like this. So please take into the consideration there's plenty of data for today. So the market might be quite busy digesting all of this data. All right. So let's take a look first at the Australian dollar, and then we will see what else is good enough for our technical analysis. So for our chart of the Australian dollar, as you can see, for our chart of the Australian dollar, looks very interesting, especially when the momentum is way below extremely oversold market conditions. 19 points has not been seen in weeks on this chart. The lowest level made by the bears was on 6,493. Then we got some kind of an engulfing pattern, and then of course the tweezer bottom was made as well here. So if we leave it like that, we can clearly see there is a cross of 50 and 100 moving average around the level 6,689 pips, so far away from the current levels. We got let me just take the magnet. We got this trend reversal candlestick pattern, potential trend reversal candlestick pattern for 6,493 engulfing confirmation. Now let me just zoom in a little bit so I can see where is the resistance, because I guess we broke broke below. Yes, there you go. We broke below the key technical resistance support. Sorry, now it will be resistance. So what do we have here is a thick red line at 6,567. That's the major technical resistance here. Let me just copy this line, because just above it there is another one, 6,576. This is the other technical resistance as well. So this movement to the downside looks very impulsive. However, so far it's like a kind of a free wave, unless we got something much more impulsive going on. So what I mean here is that we might have 1 2 3 4 5 impulsive wave from the top of 6,821. So let's say in our situation, of course, this will be some sort of the wave 1. Okay, so that's the impulsive wave 1 to the downside. Let me just, there you go. And then eventually we got the wave 2. So now we are expanding. Wave 3, wave 4, and wave 5 is needed to complete this bearish, of course, impulsive structure. So key technical resistance is on the chart. So we shouldn't expect much right now from the bulls. Maybe some kind of a pullback. Well, it's very much expected, because as you can see, we are trying to bounce from the extremely oversold market condition. Maybe, just maybe, bulls will have the opportunity to recover towards the 6,567 level. So that's the Australian dollar for today. There are some data from the UK, so let's find out the British pound, what is going on there. On the British pound, the situation is quite clear. We don't have any drastic movements and aggressive movements to the downside. This technical resistance 1.2372 is still the one that market participants should pay attention to. We got one more here, 1.2343. Those resistance of course might be only temporary, because with that kind of a bearish momentum, steady bearish momentum, let's just take a look at this. Technical support 1.2273, and you can see steady bearish momentum. No chance for bulls to break back into the territory above the 50, right? So that's generally very good indication of a steady bearish pressure, and we can see this on the chart as well. Bounce, sold, bounce, sold, bounce, sold, bounce, sold. So that's the sequence. It's been going on for at least last 10 days. So it's not like something came up just yesterday or something. You can see, of course, we can do the kind of a channel, descending channel pattern. Of course, I thought that maybe this market would be similar to the wedge pattern, right? This pattern should be following the wedge pattern. So far it didn't happen. It actually doesn't look like the wedge anymore, more like a kind of a channel. So that's the other situation here with the pattern wise. So the low 1.2307, that's the low. Now we are testing this technical resistance. In case of a breakout, there's plenty of swing highs, lower highs to be tested. So there will be some level actually making pressure on the bears as well. So don't worry about this. The situation is steady and it's to the downside. The outlook for the British pound didn't actually change much. So we are still trading according to our scenario. And last but not least, we didn't look at this recently, but let's do it right now. What is Bitcoin doing today? We got, of course, the technical support 25,834. So this technical support is still in play. What else? We have the technical resistance. The resistance is located at the level of 27,667, and in between these lines there is the whole whipsaw trading. The whole whipsaw trading is taking basically place right now. We cannot say that any of the market side, neither bulls nor bears, have the advantage over the other, because it looks like on the larger time frame, of course, bears put the pressure on market, but bulls are trying to respond. So far, it doesn't actually looks like they are doing it quite well. The technical resistance here is still present. We even have some kind of a zone here. Very impulsive declines, corrective pullbacks, impulsive declines, corrective pullbacks. This is not a bullish market at all on the Bitcoin, so we should expect another either range based whipsaw trading, or maybe some sort of the gentle push to the downside by bears as the weekend approach. So the bears can have the advantage, another advantage over the bulls just before the weekend starts. Of course, the prospects for the next week are quite different, because next week is there's a monthly close of the month of May, and there will be, of course, a weekly close. So very interesting situation might be observed on the Bitcoin chart. So please bear with me next week, as well as we will take a look on the next possible move, next possible scenario for the Bitcoin as well. For now, this is everything from me for today. Thank you very much for watching this video, and I hope I see you guys next week. So take care and bye bye.